Right, so we're now going to be focusing on the Kenyan budget, bringing you pre-budget analysis ahead of the budget, which is expected to be tabled next week. Joining me now from Deloitte is senior tax partner Nikhil Hira. Nikhil, thank you very much for your time today.
Pleasure.
Nikhil, let's start off with the fact that we know inflation is looking better. Growth has picked up quite extensively. We're also seeing the agricultural sector recover quite a bit. Tourism also looking much better than what it did this time last year. But the question is, have revenues increased in tandem with all these extras that we've been seeing over the last few months?
Yes, there's no doubt tax revenues have increased significantly over the years. And we're seeing, better collections from the Kenya Revenue Authority. They're approaching it more professionally. Unfortunately, we haven't met our target. The target that was set for 2009-10 was 545 billion Kenya shillings, but we actually see our forecast is 532 billion. I guess that's not unusual, given that we were in a downturn for a little while along with the rest of the world. So I think it's been a commendable job by the Kenya Revenue Authority.
All right, you're talking about 545 billion is what you would hope for, and of course it's not going to be at those levels. How are you going to fund that deficit? I mean, is the Kenyan government also expected to go onto the debt markets and raise some of the money that will be needed?
Yes, in fact, they have been doing that for some time, and they are projecting that the debt component will be about 40% of their GDP, which is not bad. They're going to try and focus on the domestic market. We've seen quite a lot of infrastructure bonds. The big electricity generating company KenGen issued an infrastructure bond earlier this year, which was heavily oversubscribed. The government is continuing to do so. They have expressed in their pre-budget policy statement that they want to be cautious about going into the local market because they don't want to squeeze out private investors and private borrowing. So that domestic borrowing coupled with a little bit of international borrowing and appropriations and aid, and I think we should be able to make the books balance.
Well, in terms of allocations for expenditure, we know that agriculture makes up a big chunk of the GDP number in Kenya. We know that development is also very important. Infrastructure needs to be quite a big focus going forward. Social spending is also high on the agenda. Tell us about what your views are in terms of allocations onto these sectors.
Well, the government issued their economic survey for this year just last week. It was very clear in there that there is a significant increase in the proportion of development expenditure as opposed to recurrent expenditure. Last year, development expenditure was about 23%. For next year, they're forecasting it at 29%, and the major increase is coming in the transport sector. And we're already seeing that happening now with a number of our major roads and highways being rebuilt and expanded. The second area that they've focused on is fuel and energy. And again, they've increased development expenditure budgets to look for alternative sources of energy, in particular geothermal. And then finally, they have increased for health and education, which covers the sort of social sector aspect of it as well.
All right, so this pretty much in line with Vision 2030. But taking a look at it from the tax perspective in terms of incentives for businesses out there, we know that in the past there were quite a few disappointments because many were looking for more incentives and for some tax breaks. Are you expecting this this time around?
Well, I hope so. We certainly had a new incentive issue introduced last year where they allowed you a deduction of 150% for investments outside of the three major towns of Nairobi, Mombasa and Kisumu. And I've always advocated that if you want to encourage foreign investment and indeed encourage local investors to invest more, you do need to give them, good incentives to do so. And I hope that is taken aboard next week. I also hope that they reduce tax rates because that's another good incentive for people to come on board.
Well, we've also known that in the past there was a very big focus in terms of stability in the markets, and I'm alluding to last year as well when all the volatility played out. We've seen a lot of regulation coming to the fore, but what about other policy changes going forward? Are you expecting any big movements?
Nothing that has been indicated so far. The pre-budget statement that was issued in March refers very heavily to good fiscal management. And I think that's very important. If we don't have good fiscal management, it doesn't matter what your budget says, you're not going to achieve what you want to achieve. So the government is focused on good fiscal management, or trying to improve it. And you know, for the first time ever, we've had a pre-budget statement, and then we had a parliamentary subcommittee vet it and report on it. So I think there's a little bit more openness coming about in all this, and that just can only be good for the country.
You mentioned the debt to GDP ratio hitting around 40%. We know that it was higher than 40% last year. But looking at that ratio, are most investors, foreign investors, comfortable with that? Are you still finding that things are looking rosy from an appetite perspective?
Yes, I mean, I think we're certainly seeing a lot more interest in this part of the world, and Kenya is regarded as a hub for Africa. You know, the airline services virtually the whole of Africa today from Nairobi. So we are seeing a lot of interest, but we do need to ensure that we've got political stability as well, and a lot will hinge on what happens in the next 3 months with our constitutional review, I think.
Just going back to some of the subsidies and of course some of the allocations, very interesting to note that electricity is under the spotlight at this stage, and of course there's a lot of talks about finding gas and of course oil in the region as well. What kind of allocations are you expecting there? Do you expect there to be a very big focus on, of course, energy supply and sustainability?
Yes, very much so. The government is focused on looking for alternative sources of energy. In particular, they're looking at geothermal, and we have a fair amount of area where we can get that from. The oil and gas sector, Uganda is running ahead with this, and their proven reserves seem to be increasing, you know, on a sort of monthly basis. There is talk about reserves in Kenya and indeed in Tanzania as well. So I think all three governments are focused very much on this area, but there's a lot to be done, you know, in terms of making sure that you've got the right people coming in to invest, and that the legal framework is in place as well.